Good afternoon, students. Today I'll be starting the chapters of this syllabus, that is the banking. So into this terms, you will be learning with the different types of systems of a banking. As you will be aware, because today I'll be starting with the help of the chapter with your banking. You'll be learning a new concept. Like before starting different types of concept internal, first we'll be moving into it. What are the different terms? How we'll be moving into the different terms, what are basically this chapter which has been meant, and how the thing is each and every concepts you will be learning into the current banking system. You will be properly involved into it. What are bankings? What are banking? We will be getting a proper definitions. What are banking? What are banking systems? What are banks and banking? These are the two differences, variations you will be learning. Now, even you will be learning a current trend as it has been more as it is this chapter. There is a new concept which has been said. You can see with the help of you can see with the help of the topic, that is a new concept. New concept means what are going into the day-to-day life, and you will be also aware that how the thing is which it was there on the pre-independence and post-independence, and currently which is there after liberalization, after globalization, currently with the help of an IT, currently with the help of an IT way of information technological level, how the thing is the banking moves the system from one department to some other department, and how the person is regulating the different types of it concepts into the different types of it manner. So that is why into this you will be also getting the information, what are the primary functions, what are the secondary functions into it, and how the history of banking has been set up. Like starting with us, I'll be informing you with the help of it how the banking has been set up into the current, because into the post like on the previous time, on the primitive age of time, around 300 years back. So on before. The thing is what you was not having any kind of a banking systems on the previous times, and then of course how the banking system has been involved, how they thought of it, that how the system would be enhanced, so that the thing is what each and every terms will be moving into the corrective measures. So that is why the thing is this banking system has been introduced. Now, in the most important is what into this chapter, the basic concept of the syllabus, which has been said, introduction of banking. They have been given the core introduction of banking, but with this core introduction of banking, they have been given the more focus on into the concept, like current concept. What are the recent trend? What are moving into the recent trend? Now, into this syllabus, from starting to end, you will be learning different type of mechanism. You will be having more focus on what are there on the current terms, because as of this time syllabus, it has been basically which you will be discussing about what are current terms. Now, into the current terms, you people would be aware with the help of credit cards, debit cards, ATM cards. Okay, so these are the different types of cards. Even you people would be aware with the help of e-banking, international banking. Mostly currently you are having, you are well versed with the mobile banking. You are for example, if you do the tele shoppings and all, each and everything means into this each and every part, a third party becomes the banks. This is the new trend where you can sit at home, where you can do the conversation, or else the thing is, if you want to whatever you want to buy, you should not carry the heavy amount, and you should not travel to here and there. So these are the new trends. They have prepared one type of its cards, and with the help of its card, you can travel to any part of its country, any part of states. Okay, so with this, the thing is what the banking system has been involved more and more into the current world, and there has been huge development, innumerous development, and with the help of this innumerous development, each and every concept which was been situated into the different types of zone, which has been inbuilt much. So that is why now into this we'll be moving with the help of it concept. First, the thing is what it's a new concept which is being said. Now, first it is what you will be getting to know what are banks and banks, what are banks and what are bankings. Now, bank, it is a one type of an institutions which is developed with the help of a government. Like before moving into it, you people should aware what are the banks and what are banking. Now you are having one type of it that is called a banking company also, and that is a bank. Now your bank, it is what a way, one type of institution where the thing is what there are so many people who will come and deposit a certain kind of an amount to get more return. So that is why they put a certain type of it amount into the bank, and that is a secure for the longer period of time. So this is what a way where the thing is what they can save the money, they can have a good interaction with the people. And with this, the thing is what it develops means it is the two-way of communications where a person put a certain kind of an amount into the bank, that person is also gaining certain type of a good profit. And even with this parallelly, the thing is what that company, the bank is also getting. I won't be saying the company that, but it is a one type of a company where he do the transaction of buying and selling. He just do, which means he asks the money from the people to invest into the bank, and then finally the thing is what bank invests this money to the outside of the people. They give it on the credit terms, and with the help of its credit terms, the thing is each and everything it has been built into the sophisticated manner. Means this amount which has been already given to the large scale business to run their business, and at a certain period of time, once they have been winded up with each and everything, so what it happens, the amount comes back, and finally the thing is what are the extra returns, the extra interest what it been getting. So on that time, the interest it has been divided to that party also, and even to the banks. So it is like a two-way of process, two-way of profitability. You get it out. So this systems it was developed into the banks, and it was developed from the government. They thought about it to put all this concept. So that the thing is because in the olden period of time there was not a simple banks, but then afterwards at a certain period of time bank it has been established. And we'll move it into the history part. So I think before starting it, you people should be aware like what are banks. Okay, so banks are the institutions that take care of the money of an individuals, and the corporates provides loans to people for the business or a personal uses. So means this amount is like the first most important they save this amount, and with this part they give the loans to the people, so that the thing is what they be getting a returns, the higher returns, they expected higher returns. Even this type of it, they have even given, they are also giving the amount to the business corporations. We have already mentioned loans to the people for the business or the personal use or for the personal use. Like as you people would be aware, like bank it has been there, so ultimately they give it the amount for the loans, and as well as for the personal use also for to run that business. So this is becomes a very good process which has been started from the government. So it becomes very communication way, a very good way where the thing is each and every people can participate, they can raise the fund. So on that time, like in the olden primitive time, there was not so many banks. There were some limited banks which they were doing the transaction, and with the help of this transaction, it was moving into the further zone. Now, here they have been also given the one part that is what you can exchange the currency. Okay. Now the third, they also deferred a wider range of services like exchanging of foreign currency, investments, banking, mutual funds, insurance, business, demat services, online trading of shares, providing public utility services like e-tickets, bill payment of bills, educative services, etc. Now they are different. Now currently, usually, you people would be aware with the help of shares transaction, and this becomes very good way where in the olden period of time when the shares and stock has been in revenues on that time when BSC has been established, like Bombay Stock Exchange has been established. So on that time, there was not a they was doing a transaction, but it was a physical mode of transaction. But currently what it happens, each and everything it has been converted into from physical to electronic form. So this is a new concept which has been set it up into the bank. So like according to it, like SEBI has been participate, RBI has participated, and then afterwards they both have thought. And finally what it happens, they have been started up each and everything into by with the help of a bank. So then afterwards the bank started to develop the certain part of it the certain part of it exchange currency, and even they started developing the foreign exchange also, so that the thing is what it will becomes a good way. And with this parallelly what it happens, the demat account has been set it up. Now if any of the person, now in the previous time the share certificates and share warrant which the people was getting out, they were getting from the physical board, means they were getting a soft copy or a hard copy they were supposed to get, means they were getting a letter of how many shares you have bought each and everything. But currently now all the things that is there on the electronic form. Now whatever the buying, whatever the selling transaction you do, ultimately the thing is the third person, that is the bank participate, means a company participates, and with this parallelly the thing is what the person participates, and then finally the thing is what the bank participates, means a bank participates from both the sides. So ultimately to do the transaction from one side, the transaction is moving on the both sides, and in middle the thing is the bank it has been participate from the both in between. The he is becoming a third party where he is doing the transaction. So you can after seeing all those things, you people got to imagine. You have imagined that how the thing is it has been moving into the vast way electronic form because because this limit account was already established from the after SEBI has established from the Parliament when the bill has passed relating to the SEBI passed on 1992. But the set of rules and regulations and each and everything came to in the hand in the 1995. But still the thing is the process was going on and still the thing is and afterwards this SEBI has started to develop the Depository Act. The Depository Act is on 1999 and on that time the Demat account where the thing is you can dematerialize your share means where your share was there in the physical mode, currently the thing is the share will be my electronic form. So this was a good way of perception, this was a good way of transaction where each and everything was moving very smoothly, very decent way. So that is why this is what a banking system does. And now the thing is what bank has been set up into the very different types of states, different types of countries, and it is currently really having different types of an area also. So it becomes very smooth way where you can do the transaction of banks and banking. And banking it is what where they accept the deposit, where where they do the transaction of receipt and payment, and the backside whatever the transaction what you do. Now, as you people would be aware, the bank starts early in the morning at somewhere probably by 9 o'clock, but it wind it up at some around at different banks are having 2 o'clock, 3 o'clock, some accepted for the 4 o'clock. Now, for this, after completing 4 o'clock, their work has been not shut up. Their work has been still there because whatever the transaction, for example, if I ask for any bank, select the timing is from 9 to 2. So after 2, the thing is what totally the each and everything is free after 2 to 2 from 2 to 4 or 2 to say 5 or 2 to 6 what the thing is it to the transaction they complete start all the process what are the internal which has been moving on that is called a banking company where each and every transaction a back office whatever the transaction it has been there so that is also being set it up so that is why currently it becomes very good way where you can do the communication part. Now as if I would be even moving with the help of an e-tickets and payment of bills. Currently you don't go outside somewhere else to do you should not wait for more like big queues you need to wait it on that time like previously. Currently it is what you can do the payment like that is a payment of a bill you can do it like which is there on online like you can you can go to that website and on the website only you can pay with the help of debit cards and credit cards and all. I'll go with that what are debit cards and credit card. But in all this transaction that is called a banking, what each and every transaction it has been done. Even you people would be aware with the help of an e-ticket which has been already shown here. E-ticket that is to say like wherever you want to go, like you should not stand in the queue. Now currently what it happens like if you go to their website IRCT, so ultimately you can book on that type the tickets and whatever the payment transaction it has been there, you can need to do it on the online. Whether you do it with the help of credit card, whether you do with the help of a debit card. So it becomes very smooth way of transaction as it is the current term. So it becomes very smooth, very good way where you can communicate properly and you should not, there's two spending so much time on the lines and also it becomes very difficulty for you to communicate with the help of a proper system. Now, this is what is called a bank and banking system. Now moving to the next. Now how the thing is the accounting system because it's a bank. Now in the olden period of time, the people they used not need to follow the way how we used to follow the currently. They was performing with the help of an common terms where they need to prepare an accounting system with the help of an hand making like you people would be aware. Now it is a collect here Catuclius in 330 BC recognized the importance of accounting methods of an economical development. Now, as the graphically the economic has been developed into the different types of a system. So, with this parallel figures on the before, like BC, it is a before Christ, like before on that time before Christ in the olden period and 300 years ago. 300 years ago, the system has been set up. We thought like as they done the research, and after doing the research they thought about it that currently the bank is not there, but the thing is what people, how they will be maintaining the account if they'll be doing a little small work, because what this is on the 330 years before, so on that time there was not that much how it has been developed currently, and it is like so many years before, so on that time there was nothing, this was each and everything was not even connected with each and everything, it was like an incomplete which was there. But then afterwards there was some research, they have been thought that if the same process it will be moving on to the current term also, then it won't be work, but if the same process if you make certain kind of changes, so literally it will work. So on that time, and this banks, when they want to set up this type of accounting period, like how to mention, because bank starts from their accounts, because if you don't manage a simple way, like as you want to set up their home budget also, what do, you just simple open the, you simple prepare an account, you just say what are the groceries items, how many the charges it has been taking out, how many the different types of charges it has been taken, what are the regular education for the kids, how many amount is you're taking out. So this is what you're maintaining the account. So on that time, we doesn't go to the electronic form. But at least what, as I want to prepare any kind of a budget, so I'm having that type of a system to prepare first that thing into the manual way. So on that time, this thing was there on the manual way, what they have taught on the 300 years before. So this, they have been taught how they keep an account. As you people would be aware, they have a bookkeeping, what we do with the help of an account, debit, credit, a debit credit transaction. So how the transaction on that time, how the record was maintained, how each and everything was performed into the systematical way, and then afterwards slowly and steadily the thing is what each and everything has been set it up with the help of in current term. Because on the primitive stage, on the primitive time before, there was not any debit card, there was not any credit card, there was not any kind of ATM cards, there was not any e-bankings and all, each and everything there was not there on that time. So this has been set up to the current way. As the thing is, the economical growth, as we are into the globalization one, as we are into the competitive world, it becomes very difficult, a very challenging way where you need to suffer with a different type of competitions into the market. So this each and everything, the banking sector, which was not on previously, because like people was not earning more. People thought about it, why to keep the amount in the bank. It is like the people who is having the huge money, they used to keep the bank. Means they used to keep the amount into the bank. So this is very challenging for the people to cope it out with the people, to inform the people that come and save it. Because in the olden times, on the before times, the thing is the people won't come into it. People was not even thought about it to be into that kind of it way. So that is why the thing is what in the olden, they only just prepared a manual way of timing, where the thing is what they used to perform each and everything into the way how they perform with the help of a record. They used to maintain a record. Then afterwards the stages in the history of banking. Now here we'll be moving with the help of different type of stages. Sorry. They will be moving with the help of a different type of its stages. Now they are having the history, how the banking has been set it up. Now banking of in India, now history of banking has been divided into the stage like pre-independent, post-independent, nationalization, introduction of financial sector reform, IT revolution and bank. Now these are the different type of stages where the banking has been set up, but still the thing is what there was little bit type of it in the previous time, there was a little bit type of disturb, but currently the thing is what it has been not disturbed. Now currently a single man also is having the account and they understand what to do, what not to do into the corrective measures. Now the first importance was the pre-independence stage. Now like before independence, like before 47, the thing is what each and everything was inorganized, which was not organized, each and everything was inorganized. On that time, the banking system was also like the way how to connect it with the people, the way how to maintain the account. It was there, but as if they were doing a manually, and that was for the specific person. It was not involved by each and every person. Then afterwards, the thing is post-independence state. Post-independence means after once the thing is you got it independence, like what are the system has been changed, what are the different types of its communications which was done, what are the form of different way of connecting with the people that was there. Then afterwards, the thing is what here it has been said the banking system how it has been developed after you get to the independence. Because what before the independence, each and everything which was ruled by the British. So on that time to perform your certain kind of duty, it becomes very difficult, very challenging for you to convince the other person and to move it into the sector. Then afterwards, once you got it for independence, ultimately the thing is what the still we are following the British rules only, the rules and regulations, but still there's certain kind of it differentiations that has been there. There's certain kind of it new terms are there. And you're following, you're accepting this type of a new terms like after once you get it for the post independence. Now, next it is what nationalization bank. Now, once the thing is what once you got it for the independence, then after your bank become a national means and RBI has been set it up and move it to the RBI also. So at least you people would be here because bank wherever the bank comes, because on the previous time whenever the person wants to open a bank, so directly move it to the central government. Then once the thing is what the central government needs the permission, the bank set it up. Now, once currently what it happens like after once we got it into the independence, post-independence, then after we comes into the nationalization of bank, the RBI becomes the nationalization. It becomes a very commercial way where RBI has been set up with got a certain type of a new rules and regulations. So with the help of the new rules and regulations, each and everything they has been developed the new systems into the banks. Means this has got a good developments which was there after into the once it came into the nationalization. Because in the post independence and pre-independence there was not even developed much. But once the thing is what bank means on that time it was there. But still, there were certain barriers where certain people was aware, certain people was not aware to perform. But once the thing has become the nationalization means as if it becomes with the help of nationalization of bank means it came into the government and it becomes very easy way, very convenient way to complete out each and every term. Then introducing of financial sectors, reforming people was not aware with the help of in financial sectors, what are the financial sectors, how the system has been completed into the into the pre, how it was there on the national. Now, once we got an independence, each and everything was there. Then afterwards, the thing is the financial sector has been developed. Now, into this financial sector means how to ask for the people for the amount and how to raise the amount into the people and how to get to the profit from the other side. Means how to regulate each and every terms into the corrective measures that is also being calculated on that. So that is why that has becomes more challenging for the people to introduce the financial systems, what are the current new financial systems which has been developed into it. Now, so that is why this becomes a very good way of communicating to the people. Now, as if it has been there, now next it is what IT revolutions in banks. Now, IT revolutions means how it has been changed a good way of where the thing is the information technology has been participated. Now, as if we are moving into the bank, you need to follow the bank rules and regulations. If there is RBI, you need to follow the RBI regulation because as if it came into the nationalization, so it came into the national, so ultimately RBI will be participant, so you need to follow that RBI Act also. And with this parallel, the IT revolutions of the bank means then IT systems of rules and regulations, means Information Technological Act 2000, it has been came. So ultimately you need to follow, means currently we are well versed with the help of an IT, we are blessed with an IT. So this is what a way where currently you're using your ATM cards, your e-banking, your tele-banking, where you do it like you give the phone. Now currently you are having this good systems where you can only go to your having the helpline numbers. You can speak to certain in each and every banks you are having the helpline numbers. you need to just call to that person, and thereafter you just only need to give your account number, and whatever the systems it is, whatever the amount it has been there, if you want to calculate it out, if you want to check it out, what are the balance and all, each and everything, it is called a tally banking. We'll move in into this sector further, but still at least what you people should be aware what is there on the IT revolutions into it. So this was a history where this stage has been prevalent. And currently we are into the IT revolution, which has been already mentioned here. Because previously, where like pre-independence, which was there in the previously, there was we was into the post-independence. Like once we got an independence, once we got an independence, the bank became a nationalization. It becomes a proper way of development, and where the RBI has been set it up, like the Reserve Bank. And once the RBI has been reserved, so ultimately the thing is the financial sectors, how to build it, the steps, how to be built it, how the shareholders we need to invite to that person, how the communication it has been done, each and everything it has been set up. And last but not least is what IT revolution in the bank. Now, IT revolution into the bank. Now currently as we are well versed with the help of an IT. Now we'll be moving into the history, little bit of history into the banking in India. Now here these are the three old bankings which have been there: Bank of Bengal, Bank of Bombay, Bank of Madras. Now this banking was called a presidential bank. President bank, it is what presiding bank means, which has been said a first bank which was set it up with the help of a different type of its sector, and which was there for the directly for this all banks directly the government has been participate, they have been granted a license, because without RBI, like whenever if any of the person want to open a bank, you need to take a prior permission from an RBI, because as the thing is now that is what after once we came into the nationalization. So on that time, what happens directly you need to take a permission of an RBI, but previously each and every terms was there with the help of a central government. Now here it is what it has been said, like these are the three banks which has been said: a Bank of Bengal, then afterwards Bombay, then afterwards you are having Madras. Now these are the called a presiding bank. Now they merged into 1925 to form the Imperial Bank of India, which after independence came into the State Bank of India. Now these three banks have been formed, they have been merged together. Now previously it was not there. Previously they was into the different, it was this different types of bank has been set up. Then after once the thing is what each and everything has been merged together, finally it became the Imperial Banks in 25, which has been set up. And this is a little bit history which it has been discussed on the previously, like when we doesn't got any kind of independence, the pre-independence time. Then afterwards, after independence, once we got an independence, this three has been merged and becomes the Imperial Bank of India. And once the thing is what each and everything converted, once we got an independence, the Imperial has been converted to the State Bank of India. Now, here the difference is what now here has been given why the thing is what RBI came into the existence. Now RBI came into existence in 1935, which took the responsibility of regulating the banking sectors as a central banks in India. Now once the thing is what the bank has been set up, finally the thing is what bank has been set up into the 49 in 1949, but before this the thing is the RBI has been set it up on that time. So on that time, but the financially it was not moving out the system, because previously the people was not aware or they was not even ready to perform each and everything. But currently it is what each and everything the people started to perform each and every duties. So that is why now if any of the person want to develop any kind of a banking and their banking system where banking functions, you need to take a prior permission of an RBI. Now this is what it is being said. Now once each and everything was now after 1925, like each and every the company the bank has been merged, the Imperial Bank, then after it became after independence on State Bank. So on that time, once it has been came, so finally the thing is what the RBI has been set. The RBI thought about it to regulate how which will be there on the different type of banking sectors into the different type of motivations. Now as it is what a good way where each and everything was developed, and to profit. These are the different types of histories where it had help of different. There was once we independent for we got RBI was from the Parliament the bill has passed, and then afterwards that RBI became a national institution. Means now currently any of the person want to open any kind of a bank, you need to take a prior permission of an RBI, and you need to take each and every steps towards, you need to ask each and everything to an RBI into the corrective one. So it becomes very fluent way to communicate, and currently it becomes a nationalized. Ultimately, it becomes very good way where institutions where now currently as if any of the banking want to open any kind of a bank, whether it is yours, you need to give certain kind of a deposit to the RBI. You need to submit it certain kind of a deposit to an RBI. So that is why the thing is this amount which has been calculated. They usually take a SLR and CR, that is statutory liquidity ratio, and the next one is the credit reserve ratio. These are the two way of now currently any of the bank open. So these two things, either you give it into the cash or either you take it on the assets, any kind of it assets, you need to submit it. It will be like SLR like 25% to 50%. It should be not less, not more. Okay, minimum 25 to 40%, and CRI is put 20% of whatever the reserve you have put it on that time, like whatever the amount you have put. So that type of it amount you need to submit it on that time. Now once the thing is what into 48, the thing is RBI becomes the nationalized, then even 14 in the 49 and 1949 when the bank has been when bank has been developed, the bank was not developed previously, still the banking act was there in 49. So on that time it becomes the proper empowerment of an RBI which has been given to issue the notes, to issue the currencies of the different banks, and to control, regulate, and inspect the RBI. The RBI can anytime now, like any of the person once open a bank, the RBI comes to the visit, and he has that much rights to regulate, to control, to inspect the Bank of India. So this bank in India. So this is what it has been given the good way of prior notice for an RBI. Like banks now currently the thing is now whatever they do with this RBI, whenever it comes for the inspection, he has that much right for banks, because once the thing is from after once you got an independence in 47. So like first the thing is in 48 RBI has been set it up into proper way, it becomes a nationalized. Then afterwards the RBI now he's having the powers, now he can set up each and everything into the banking sectors. So like currently, like any other person wants to open an RBI, as if I said it previously, you need to privately you need to take information from an RBI. Now RBI, whenever he comes for any kind of license, he can come anytime to inspect, to regulate, to control any kind of it matters, whatever it is going into the banks, as if any other person, because as if it has become a nationalized, so he has that much rights to come and investigate for any time. So it becomes very good way of responsibilities to take care each and everything. Okay. So now this becomes a different way where it is being set it up now. This is where the thing of after independence. Now once we got it independence, nationalization, little bit here nationalization of bank, it has been given on July 1969, 14 May. Now here there is only the information, common information which has been there. So with the help of this common information, it has been said like on 19th July 1969, 14 major banks was nationalized, because on that time, and on April 15, 1980. Okay, another 6 banks was nationalized, means it becomes a total government, means it becomes a bank where RBI has been regulated. Why I said for the nationalization means where the thing is what RBI has been regulated, because already previously it has been mentioned the nationalization of bank means where the government intervention comes and finally each and every transaction does. And last it is what with the nationalization, the banks of the banking in India shifted from class banking to mass banking. Class banking means in the sense means there was a previous which was there on the very common way, but currently it becomes a very sophisticated way where each and every terms has been discussed and each and every banking sector, banking system, banking financial, each and everything has been set up into the corrective measures. So that the thing is what currently each and every people can be identified with the help of a proper zone. Now once the zone it has been completed, so ultimately the thing is what? It becomes a nationalization. Now this is what a banks where it begins a nationalization. Now, as this is a nationalization, now next we'll be moving with the help of next term. That is for the current banking scenario. Now, this we have learned with the help of nationalization. So currently we are moving with the help of a current banking scene. Now, into the current banking scene, each and everything converted into the from the physical to the electronic form. So that is the difference which has been there, because previously all electronic form transaction was not there. So currently what it happens, each and everything converted into the electronic form. Now see, first it is what currently, now here also it is given a different short terms where the thing is what, how it has been set it up. Now first it is what currently Indian has 81 scheduled commercial banks, 28 national 19 nationalizing banks, and 8 SBI groups plus 1 IDBI, 29 foreign banks and 24 private banks. So these are the different way where the bank has been set up, because into the primitive times or the olden times, like in this much banks was not set up, but currently there are so many banks which has been set it up. So this is what a good and challenging way of competitions to be into the current market. Then afterwards, first there was not a foreign bank who was being into it. There was a bank, but not that much. But currently, you are having so many foreign banks who likes to invest into Indian companies. This is also there, and even there are certain foreign banks who have been set up into the India. So that the thing is what the bank has been set up, because this all comes into the private banks. There was first it was there on the public banks and private banks. Like public banks it has been there, or government banks it has been there. So it becomes very difficulty for the people to communicate, to regulate each other. But private sectors banks, like for example ICICI Bank, HDFC Bank, these are private sectors banks. They want more customers, like they think about it more on customers. But when doing publicly related reports, they think about it whatever the profit it has been gained, or there are certain banks where they set it up each and everything. Now that is why the thing is what, first it was only this private sectors banks, public sectors banks was only built it. Now currently you are having a private sectors banks who have been set it up. So with the help of it, private sectors banks, it becomes very vast way where you can communicate with the people into the good terms, good knowledge and all. So it becomes a current way of scenarios which is being said. Then afterwards, then afterwards, the combination networking over 53,000 branches and 1,700 ATMs. Now there are so many different types of ATM. And previously there was not ATMs. Currently we are having ATMs. 17,000 ATMs which is there, and branches to the neighbor. Now like there are so many branches which has been there. Now for example, if you want to go to the state bank, so currently as a state bank here is also there. Even you are having it done, you are having to the nearby to whatever the area it will be situated. So it becomes very good way where you can make it out very fluent, very easy way of communicating to the people. Then a public sector bank hold over 70% of the total assets of the banking industry, with the private and the foreign banking holding 18% and the 7% respectively. Now see how the 100% has been divided overall. Like 75% which has been totally based on the assets. Means they usually invest that amount into the assets. Okay, means a public sector bank. Then afterwards, the rest of it, private and the foreign banks, you are having 18% who are involved into it, who are holding into it, and 7% respectively. Means they have been different. There are the different types of it sectors. So this becomes a very good way where current banking system has been set it up. Then you'll be having a comparing the easy and tight money policy. Here it has been divided into two. First one is what easy money policy and tight money policy. Now, when related with easy money policy, now first you can see it out over there. You are having a four lines which has been mentioned on the east, west side, both the side. Now, first you need to see increasing the money supply. First, easy money policy, what it happens, it becomes very easy to supply the money from one place to another. Then afterwards, lower interest rates that thus encourage the investments and spending. Both policies affect the money supply. Now, like easy policy and tight policy, they both affect the supply, they both policies supply each other, but still it becomes very, both policy affects after, like little bit there is a changes where the easy becomes very fluent way where you can do the transaction from one party to some other party, or else if you want to develop certain kind of a new changes according to the electronic economical way, you can do the changes. But when related with tight policy, here you'll be having every time into the minus sector, because here the amount which has been said, the money, like whatever the interest has been there, it becomes very difficulty to pull out that type. But here it becomes very easy policy, very easy policy. Here it becomes very difficult to accept each and everything. Now, when used when economical experience is rapid and way of extensions and may causes to the high inflation. Like whenever if they use that kind of money, if they like they thought about it, like whenever you are using any kind of a money, make sure that when you are in if there is a high inflation, it causes very difficulty, very tight way where you don't know how to make it out the amount into the corrective measures. So it becomes very difficulty for the people to communicate on that time. Then afterwards, raise the interest, causing the investments is the investments. Now, is the cause of investment spending and declining and bringing the real GDP down. Like what it happens when it is a tight policy, it becomes very difficulty where the thing is what your GDP become down. Means it doesn't grow to the great level, but ultimately it falls to the ground level. So it becomes very difficulty for the people to communicate, to perform that each and every duty into your old shelters also, it becomes very difficult. Then afterwards, you are having banks in India, bank in India. Now you are having different types of banks. Okay. Now like before bank, how the thing is what it has been started. The two procedures have been started. You are having Ferguson and the company and Alexander and Company. These are the two British company, often marketing, often managing agency. They have been set it up with the help of an first type of it banking into which was performed in the European lines. Then afterwards the first stock bank was established in 1786, the name of General Bank of India, which has been set it up. Okay, so these are the banks in India which was there on the previous time. Then afterwards, later the Bank of Hindustan could continues only up to 1806. Like first it becomes the General Bank of India. Then afterwards it has been changed a once, and finally it becomes the Bank of Hindustan, and it becomes the No, it becomes continues till 1806. Now, you can be a part of history. You can decide on that and so on. That way, the thing is what each and everything systems what we moving on the different times. Now, as this also we are discussed currently, the banks are in eras of presidency banks with the sanction of British Parliament, as if I say like previously on that time Parliament. The Bank of Bengal was established in 1809. As a first deciding bank. Like first, we have already mentioned Bank of Bengal, Bank of Madras, Bank of Calcutta. Like into these three banks, the first bank was set up on that time on the way of 1809. Then after it continues to the year of 1920, it has been set up. Means the same bank has been set up continuously. Now then afterwards, once the Imperial Bank has been set up, we went with that Imperial which has been converted into the State Bank of India. Came into existence into the 12th of January 1921. It acts as a priority centers of banking of a country, of a treasures of a government. Then after as the agency of a note issues, There was a bank, such as a bankers bank. Now, like they on that time, the notes was not issued. Then after a certain period, the note was issued, and then afterwards it became the drastic changes to set it up each and everything into the corrective way. So, like on the 1921, like before independence, also the thing is the process was there. Still, each and everything was there, but still there was little bit miscommunications, misguidance on that time. So it becomes very difficulty where people, the most important people should convince on that time. So then only they can open a from bank they need to open any kind of an account. So this was a little bit type of a history which was there on the current period of time where each and everything was set it up into the corrective way. Then afterwards, you are having with the passing of an RBI Act 34, like this is the way where the data has been participate. The RBI came into this 1st July 1935. Like once the thing is he got that is right. Then afterwards he came into the world of 1935. He came to world, and then afterwards they set it up with the help of an RBI. And with once they set it up with the help of an RBI, so each process has been set up into the correct one. Then afterwards, thereafter it function as in daily commercial banks of countries and agent of an RBI. Now, if the same thing has been continued by some other person, so it becomes very easy, very firm way where you can at least raise your certain kind of a good thoughts, good values and all. So it becomes very functioning of agents of the country and its agents also. Then first commercial banks in India, it becomes the first. Then like once you got it out the way of the bank, first bank has been set it up into the India, then after it becomes a commercial bank where you can do the transactions into the different types of it more into different type of systems. Now, you're mostly mostly it has been said the most of the joint stock banks were established under the provision of Indian Companies Act 1913, and then after was amended on 34. Like what it happens like previously, like because as a bank and banking it is in there. So previously only I said like bank and banking company. It is in a company. Now like when the thing became a company, ultimately what will happen? The Indian Companies Act will be established. It has been established. So what it happens like whenever the bank it has been set it up, so like you are having in 1934 a total part of it amendment. So with the help of it amendment, each and every transaction will be done into the future way. So this is what it is there. Now here it is given the post independence means once you got it independence, what do you do it on that time on that area? The new chapter has been set it up and the new different type of milestones. The new several type of milestones in the field of Indian banking has been set it up. Means a new type of development has been set it up into the bank, so that the thing is what it becomes very good way where people can come and they can communicate into the different type of it zone into the proper type of it manner. So this was a way where a current way of motivation has been set. Then after the RBI PR of an India is well coordinating the banking activity and regulate them to the currencies, credit, accounting according to the economical and financial needs of the country. Now, one of the thing is what as if we went to the previously where different type of it it is already been given to the help of it banking in India. Like these are the different types of bankings where it has been said. So like what it happens like once you got an independence, but then RBI has different guidance and with the help of an RBI, each and everything was moved into the corrective way so that the people would be aware like what and how to perform each and every duty into the correct way. So this becomes very good way where financial needs of country is being completed of. Now, see, the RBI of in India is well coordinated with the banking activities and regulate the credit currency. Means they have been morely focused on what in credit means the person to whom you're giving and liability holders to whom you're giving like money where you're giving to it, which you're giving to the loan. And next it is what a currency where the currency floats from one country to one country to some other country or one country to some other countries or their currencies has been defined. So on that time they regulate each and everything, and with this parallelly the financial system is being completed into the way of a country, where because without this each and everything my system won't be clear, so it becomes very difficult way to communicate to perform that way. So like RBI, it has been there. Without the help of an RBI, it becomes well coordinated on that time. Like before, once the RBI has been set it up, then afterwards each and everything has been come properly. Now here I have drawn you the different type of functioning of banking. I'll move it further. What are the way of it? Like before here, I want to know about it. I want to show what is the functioning of a bank. Now into each and every bank, where before starting, in each and every bank, if you are having a bank, and you'll be having two different modes. One are into the agreements and one are into the disagreement. So on that time, currently I'll be mentioning to you at certain way where certain things are being not been qualified, but still it is working on the same where certain way where it has been qualified, but still the thing is it's not working. So this is what a primary functions and secondary function. Now functions which is with functioning of bank, which has been discussed with the help of different type of it, where it is a financial bank functioning of banks, which is in a primary banks and secondary banks. Now primary functions and secondary functions. Now different type of it. Primary functions which has been designed with the help of accepting deposit, granting, loaning, and advances. These are the different way where it is being said with the help of primary. Primary, it is the way where you are introducing your bank first time into the market. So at least with after seeing the primary type of bank, the people would be aware, the people would be more qualified, the people would be more accepting, they would be more ready to accept the different type of it more. So it becomes very functioning into the primary, becomes very good way of communication. We are having secondary. Secondary means already it has been currently which is moving on. It has been utilized into the longer period of time. So it becomes very good way where you can communicate with the help of a secondary. But without without the primary function, like what are the first one, you cannot move it to the secondary directly, because like primary you need to start from primary, then afterwards you can confirm the same thing into the secondary one. Now here what are the primary things that has been done? Accepting the deposit, granting loans and advances are the two things where the thing is what primary function in the first time things we will done. First it is whatever the deposit it is, you accept it out, because whatever the amount it has been given to you, you will accept that thing. Next, granting loans and advance, you even gives the loans and advance to the people, so that at least people would be more with the help of less interest, at least people will become very good way of communication. Then afterwards, next secondary is agency and functions and utilization of fund. Now here it has been said first, what are the accepting deposit? So where the goods will be accepted. First it is what a saving account, fixed account, recurring account, current account. This has different way of transaction. This has the different way of account where the transaction has been done. Then we'll move it to what are these three different, because as you are into the banking sector, see people would be aware what are the savings banks, what are recurring banks, what are fixed deposit, because without this the transaction is being not at all completed into the now. The same as if it has been there for the financial functioning of banks. Now here it has been said functioning. We went for primary, we went for secondary. Now as if we move it to the primary or a secondary one. The first primary, it is what the first time how you coordinate with the help of the first time. Then afterwards secondary, it is how you coordinated with the help of a secondary. Like as if you want to move it into the banking sector, you need to move first to the primary one. Then once you are completing with the help of primary, you need to move to the secondary one. Secondary. Now to the primary, first you people, it is accepting of deposit, granting of deposit. These are the two ways where the thing is what the cash, it has been the cash, it has been moved functioned from the bank from one place to another. This is what a primary function. Secondary function is what agency functions and utility function. That is like fund transfer, check collection periodically, then payment collection, portfolio management are the functions. Now, using of it, overdrafting, then and letter of credit, locker facilities, dealing in foreign exchange, project reports, social welfare are the utility functions. Now, means these are the different type of utility, means an extra benefit to the customers which has been given to them. So, because after this type of functions, each and everything will be moving into the corrective one with the corrective way of measures. So, it becomes very good way where you can communicate each and everything. Now, your once you will be moving with a different type of it, I will be moving with the help of primary functions. What are primary functions? Okay, now what are primary functions? Now here it is being there. Primary function is the commercial banks. Is the commercial primary banks is the saleable banks accepting the deposit in the primary function of saleable banks and in the based of its life. Without accepting deposit, the bank cannot finish any other functions or any such. It is very important to understand the primary function of a commercial bank. Now, as if it is once it is a commercial means a regulator which has been regulated with the help of an RBI. The main concept will be what the thing is to move it in the primary function. Now, primary function as if you're moving about it. So, on that time you need to totally you need to focus on like what are the systems, how it is moving, how to perform each and every duty. Then afterwards, because without this, the thing is what it's a primary means the first time where you are doing a confirmation from each and every zone. So that is why a primary becomes a primary function with often bank like accepting deposit, payment of it, you're doing a payment, you're doing a receipt, or you're doing any kind of it small type of it work where the thing is what it is basically with the help of it, parties where it has been inbuilt. So it becomes the primary functions of it, like first time it has been inbuilt. Next it is what which has been said with the help of it. Primary, it's very becomes a difficulty for accepting. It becomes very good way where you can accept a certain kind of a deposit. Like first time, what when you open any kind of a bank. So like when you open any kind of banks, you put certain kind of it amount that is called a deposit. What you put without the way of deposit, you cannot run with any kind of a bank. So these are the way where different type of banking system it has been developed. Then afterwards, next it is what banking primary banking. What are primary banking? First, accepting of deposit, as if they will be accepting a certain kind of a deposit from the party, so that with the help of the party, they can even rectify with the help of it good terms and to be further. Then lending the help of your functioning. Now next it is what the primary, as if I'm going, why the thing is that mostly people would be having a primary banks or primary functions why they accepting. First, accepting of deposits. First, it is what the accepting of any kind of a deposit. It means you are totally involving because bank it has been there. They doesn't even perform some duties, but there are certain duties who have been responsible from the party. So that is bank it performs its duty from the third party. So that is why these are the first way where the good way of term it has been already been discussed. Now because previously only they have been said that primary functions. Okay, here it is the primary way where each and everything is in participate. Now first it is what where you do the transaction with the help of first accepting of deposit, lending money where the thing is you give the money to someone else, then investing the funds where the thing is you putting certain kind of it amount into the shares and debentures and all, shares, debentures and stocks and all. That's the primary way. Then after rendering various services to the customers, where with the help of certain amount, you're keeping certain kind of a deposit secure for the longer period of time. So like it becomes very common way where you can communicate each and every transaction to the bank. Then after credit creation, as if I say CRR and SLR, we have discussed currently that statutory liquidity ratios and credit creation. This is the different type of process where how the thing is you give it this amount to the non-banking and how the thing is how you do the transaction with the help of a banking by providing you the loans and all it. But this is the primary zone of banks where previously like you perform this type of duties into the current work. Then remittance of funds. Now, basically, this primary way where the thing is what saving account people come, remittance of funds, like the people who outside the countries amount you come, you bring that thing into the India. Remittances is what bring back to the India, means whatever the different type of it currencies are there or any kind of persons are there, they're performing their duties. So ultimately, you can do their transaction with the help of this type of a fund. Then afterwards, dealing in the foreign exchange as if, because currencies are there, so ultimately this all things comes into the currency exchange where you change the currency, and then after dealing in securities, you are having those security markets where you are dealing out that certain part of it amount, and with the help of a certain part of the amount, the thing is what are your registration which has been done, like your demat account, whatever I said you the currently, the electronic form of doing transactions into the current market. So with this way, the parallelly the thing is the primary market has been served. Then afterwards, accepting the safe custody of valuables or valuable or provide the lockers where you get it a good type of it facilities for the people for the locker breach and everything, because currently people on the primary, this all comes into the primary zone, because your the thing is what are short terms from where the thing is the banks issues, the banks give certain kind of, the banks get certain returns, and with the help of the certain returns has been developed with the more into the different type of it systems. So this type of it different type of it functions that is being set it up, because without these functions the thing is each and everything my primary functions it won't be working into it. So that is why compulsory you need to perform this type of it primary functions. But it starts from step by step. It starts from first from the primary, and then afterwards secondary. It comes after once you complete the primary. It starts from the second one. So then afterwards you are having primary one done. Then afterwards you are having here I have shown certain kind of a primaries one where the thing is what different types of it accounts also I've shown here. What are different types of it accounts? Now see. Now, as you people would be aware, fixed deposit, the saving deposit, and recurring deposit in current account. Now into the minds, mostly you people would be aware with the help of three accounts: saving account, current account, recurring account, or a fixed deposit. Now, what happens into the saving account? Saving account, it is the amount where you come, did you bring certain amount and save that amount for the longer period of time. So, like in between, if you want to accept it, if you want to redeem the check, like anything you want to do it, you can do it with the help of an own zone. Because what it's a primary one where each and every transaction becomes very good way, because it's a saving. It becomes a certain particular amount person, certain particular person doing a transaction with the help of its account. So it becomes very common way where you can do with the help of its saving account. Next, you are having a current way of account. Now, usually there are so many private banks who open a saving account with the help of a zero balance. But currently, as if you want to open a current account is only for the business purposes where you're doing a transaction. Like for one party from other parties, if you want to if you want to perform any kind of a transaction directly, you do the transaction with the help of a current account. But this is what where you are into the business, then only you're performing, because minimum the balance of the different types of banks, it is minimum you need to keep it into the account 10,000 rupees. So because then only you can handle it out this type of transaction. So this compulsory for the people who are into the business, who need to follow with the help of it, who need to follow with the help of the same, that is called a current account transaction. And then after you are having a recurring account where certain type of it amount which has been fixed, and at a certain period of time you are recurring and you fixed how it is being made the same which is being used is to account where you are getting the amount for the longer period, and once the thing is the maturity has been completed, you are getting your returns with the help of it, like whatever the maturity it has been, you got the amount, and once you are getting the maturity, you are using that type of it amount into your different type of uses, whatever you want to use it. So becomes very harsh way, very cool way where you communicate with the people. Now here it is what here it is in said fixed deposit, saving current, and saving, current, and recurring. These are the four types of a different type of an account it has been shown. So with the help of a four types, the thing is what it has been shown how the bank it has been situated and how the account it has been moving into the different type of a transaction. Now, as if here we went with the help of a different type of it accounts into it. Now into the banks, usually these three types of it account, different types of account. Like for example, saving and current. Like if you want to take it out the cash, you can take it out. Means as if you want to deposit any kind of it amount, or you want to give the payments to someone else, or else you want to receipt it out each and everything, you can do it into the saving and current account. But where you are into the recurring and the fixed deposit, you are not into, because as if that amount is saved for the longer period of time. That will, for this you will be getting certain type of it amount with the help of an interest. Means whatever the deposit you have done, so like in the certain period of time you will be getting an interest. Now see, the fixed deposit is an agreement to place an amount of money on the deposit with the CRDBI Banks Limited for the fixed term. That is called a fixed deposit. What you do with it for the fixed bank. Next, saving deposit is it is when you been saved for a new car or for a new house. That is called a saving amount. Means you think about it like as if I want to buy any kind of a house or any kind of a car for the future, so I can utilize that type of it amount. Next, current account in the terminology. The term current account refers to deposit of bank account or financial institutions without the specific maturity date. Now here there is no any kind of maturity date, but still the thing is you need to follow that type of it current account transaction where you do with the help of demand account. Next, recurring deposit is the recurring deposit, a specially kind of term deposit offered by the banks, in which in banks which help people with regulating the incomes to develop the fixed amount every month into the recurring. Means every month you're getting certain type of it recurring amount into your whatever the recurring deposit it is in there. So this is what means once every month you get it, but that is for the fixed one, that is what a fixed what you get it. Here it is what recurring, you are getting certain type of it amount, and in the certain particular you're getting every month. So I have bolded out this time to deposit a fixed amount every month into their recurring account and earn the interest at the applicable to the fixed deposit. Means how the thing is you're getting the benefit into the fixed deposit, same you'll be getting into the recurring account. So these are the different type of transactions where you perform. Next, accepting of a deposit, again I'm moving like what are the terms which has been discussed, which is done in the primary functions or primary banks. First, it is what accepting of deposit. What are types of different deposit they accepted? Fixed bank, fixed deposit, saving and current. This we have already mentioned currently that thing. Then after advances of a loan, advancing of a loan. This also they are therefore primary by giving them the cash credit. Okay, like you can buy the goods, but you can pay the amount with the help of certain cards or certain period of time. Then call loans, whatever the loans which is being given to you. Then overdraft, then bills of discount. So it becomes very convenient for a person to make each and everything into the corrective measures. Next, it is where you are doing a transaction with the help of a fixed deposit is an agreement which we have completed currently. So this is what a different way where a company has been set it up. Now this agency functions, now where we move it first with the help of accepting of deposit, primary banks I'm moving with it. First is accepting deposit, next advancing of loan, how the advancing of loan it is being said. Next it is being said with the help of it agency functions. Now here you are having different agency of different type of it companies who comes and participates on that time. So that the thing is what the people will be more interacted, the people will be more. Now into this agency implementation, what you do, collecting the receipt, then afterwards making payments, buying and selling transact securities, Then after trust and executor. Now these are the different types of scopes where each and every work has been moved into the different type of zone. Then general utility functions. What are the different things which is being given into the primary one? First, issuing the letters of credit, traveler check underwriting shares and debentures, safe custody of valuable, providing ATMs and credit card facility, providing credit information. So these are the different way where current which has been moving into the primary market. But as the banking has been set up directly, it doesn't move from the secondary one. First it moves it to the primary, and then once it is moving from the primary, then afterwards it moves into the secondary one. Because what after you move it into directly, if you wanted to move it into the secondary market, so ultimately you should have the secondary banks. So firstly, only the thing is the primary banks should be set it up into the corrective one. Then only you can move it into the second one. So these are the way of different terms which has been discussed into the starting in new concept of banking with the way of different type of styles, in the way of different type of it common terms, and with the help of history, how it was there on the post pre-period independence, like pre-period independence, post-period independence, nationalization, how when the banks has been nationalized, how the ruler banks has been changed. Now you're into it, how the act has been participated, like before this the RBI has been came, like after RBI each and everything, the rules has been changed, the performances have been changed. So this becomes very a way where you can communicate each and everything into the corrective measures. Now your general usage of functions, usually into the primary where you are accepting any kind of it amount, your ATM cards is being used, your debit cards is being used. This becomes a general utility functions. Now like starting with the help of then check depends upon the check, like when you're traveling also, but still the thing is the check it has been issued to you, so at least you can do the transaction. Then shares, like as if you want to do with the help of electronic form of shares, means that is called a dematerialization of shares. Like previously only you need to start with the help of demat account, you need to open the demat account transaction. Once your demat account once your demat account transaction has been completed, then afterwards you can move it into the good way where each and every things are to be mentioned with the corrective measures. This becomes very easy, becomes very good way where he communicates with the people. Then secondary one. Now first one we went to the help of it primary functions. Now secondly we will move with the help of a secondary function. What are the things are to be discussed into the secondary one first? What are the secondary functions? First is what acting as an agent for the government, local authorities or any other customers. So it means basically this type of functions is a one type of an agent. He becomes an agent of the secondary one. Then afterwards management of an issue, dealing with the properties, sums as securities, securities against loans and advance, means there has been, now here the second part it has been come, like first into this they gives you the loan, but the secondary it is what, why is they accepting the loan, what are the assets you keep, what are the things you keep it, what are the assets you keep it on the mortgage purpose. So that thing they see it on the checking with the help of it into the secondary one. Now even like as if I kept the people into the bank, but still what is the management, how each and every concept, how the people are performing their duties, how the rights they are performing their duties, each and everything is being checked. Then acting as an agent for the government means as if that person will be acting as a government only, means that person is from there only, or any kind of it local, means he is performing his duties into the corrective measures. So basically the secondary one, it is what a person, he came from a primary, and then afterwards once he comes from the primary he becomes into the secondary one, the way. Then afterwards, motions of banks, there are different type of motions. Means there's different types of people where people comes and communicates on that time. So like there are different type of motions where you are communicating with them. Then afterwards, motions of banks, promotions what you do it into the different banks. Then afterwards, administration of estates or as an executor or a trustee, like. You open any kind of a trust, and then afterwards that to regulate each and every work you perform the duties. Then carrying on guarantees and indemnity business, like any of the person lost their business. Then afterwards, what are the taking cares, what are the measures, what are the things to perform. Each and everything was been done with the help of this guarantees on the carrying on the guarantees and indemnity business. So these are the different way where the people perform his duties into the way of different type of terms. So with the help of this, the thing is what it is being said, to perform with the help of it, first as if with the help of it proper way of securities, proper way of performing their banking and financial way of systems into the different type of a zone. So at least with this different type of zone, the people would be more, communicated with each other. So these are the way where secondary form of way of banking has been set up. So like as if the bank it has been there, so like starting with the help of primary only, then only the secondary banks will be set it up. Now next time we are starting with the help of a chapter that is called the changing role of banks. How the bank has been changed in silver role. Like before starting this chapter, I'll be concluding that part. The thing is into the pre and the post era, what how the banks have been set it up, how the people were set it up, each and everything, and how the people used to communicate on that time, how the transaction was being done into the previous way, because before the independence, after the independence. So this was a little history which has been discussed into the banking sectors of a new concept where of banking sectors. Now here, what are the changes has been set it up, because currently there are no changes as we have already previously went to the IT revolutions in banking. The IT terms has been increased more currently into the market. So into these terms, what are the IT terms has been developed? What are different types of it cards? What are different type of systems has been set it up? First, it is what are introductions. I will move the help of it introductions. Now into this chapter, basically which is being said, this chapter basically it has been giving you more information. What are the IT things has been discussed. Then afterwards, what are the changes has been done, as if from the manual way with the electronic form, how the system has been becomes very easy for you people as to move it into it or to get the information. How the thing is what system has been involved. Like as system is also there, but still why the thing is what any kind of it good way of calculation, good way of performance it is being performed. Now here the thing is what the financial sector is undergoing the process of radical transformation as a result of significant increase in competitions into the changes in the purchasing habit of the customers and the perceptions. Now what happened currently, the perceptions of a customer has been changed. The customer preferences has been changed, and with this parallelly the thing is what the financial institutions also thought about it to develop it more and more into the good and nice way, proper way of term. So first it is what the financial sectors which has been discussed to you, then afterwards into this, and why the thing is you get it the good way where you move it into this new changes into the role. First, it becomes very more flexible and more dynamic, means it becomes very huge. As if you're running with any kind of it electronic terms or an online terms, it becomes very easy to communicate with the people. Then increasing the technology, because as if different type of it knowledge technology it is in a, because previously this type of technology was not used, because on the olden period there was no money, there was not sufficient fund, the people was not qualified, and on that time the GDP was too less, the people was not involving much into it, because we thought about it it is too difficulty to understand each and everything. So that is it. But still people are performing that type of a duty. So that is what how you perform on that one. So like with the help of this, the thing is each and every transaction which is being done into the group of the people. So that is why here the thing is the changing role of the bank. Now changing now here they have been now into these chapters the changing different what are different types of changes you will be learning. Then after now see here I have given one type of a distribution channel. Now here I am having this different type of distribution channels where each and everything which has been done into the online way. How the thing is what online way it has been done. Now, as if you people would be aware now, here I have written with the help of branches, mobile banking, shops, telephone banking, electronic banking. Now, each and everything it has been arrowed, which has been moved to the different type of a system. Now, first I'll be moving with the help of it branches. Now, type of distribution channels. That means any type of it branches, any type of it mobile banking, any type of it shops, telephone banking and electronic. It's all becoming with the help of an e-banking. Means it is all done with the help of an means through internet, through net it has been came. So this is what the new development, new changes which has been developed. So on that time, like as if you're moving into the branches, so how you do the transaction first. Branches which has been there with the help of our traditional offices advising consultants, like you as if you are having different type of it distributions to the people. If you want to distribute different types of it traditional offices, now currently branches, like there are so many offices has been set it up now with the help of different type of it offices has been set up. So what a bank, the branches has been developed more, and once the branches has been developed more, so my work becomes very good, very nice way to perform each and every duty. So like I'll be having advising consultancy and a traditional office. Like I have a two arrow which I've already mentioned here. Okay, you can see look it out the way where this one line which goes to traditional and second line which is goes to the additional, or else you can write a consultant. Both you can mention it on the time. Then afterwards the different branches where the different systems are being set up. Then you are having mobile banking. Now currently people are more well versed with the help of mobile banking. Now here the mobile, usually people if want to, what are the new changes which has been done to mobile? Currently you are having direct distributions to the channel where you want to connected with the people. It is first is mobile office. You need to go to the mobile office where you can connect to the people. Then afterwards you are having a bank visit which has been there. People used to come on that time to visit a bank because they are currently as if once the license is being given to you, previously I said to you, once the license is being given to you, at the certain period of time you should not say no, I don't want. Because once if you say no, so ultimately you need to bear the cost, whatever it is in there. So what it happens becomes very difficulty for you to shop on that time. Now here I'm having different type of mobile banking as if I want to do it. So I'm having mobile office, banks visit. People used to bank visit, franchise bank visit. So the two way of mobile offices and bank visited. Now shops, currently I'm having so many different types of shops where different distribution channels of way of changing it has been done with the help of first agency, first franchisee. Franchisee it has been there. Next agency, it has been connected with a different type of it agency. Next personally you interact with the people and inform those different type of it changes which has been made. Then after telephone banking. Now telephone banking, here it is what into telephone banking. Here it has been directly to the person it has been given. Then afterwards it is given to the voice regulation unit. So these are the different way where different type of systems has been developed. So currently if any kind of a person wants to do any kind of a telephone banking, so you are having different type of a system that is you can even move it to the voice recognition, and currently you are having currently as if you are having a personal, you can do the interacting with the people. And last but not least, it is what electronic banking, which has been moving into the current world as if for the ATMs, as you people would be aware what are the ATM, that is automatic telemarketing way, where the thing is what anytime you can use this type of it amount, where you can swipe the cards, you can take it the amount. Then afterward terminal telephones and automatic office. These are a different type of it where electronic banking has been set up. Now here there is a different type of a distribution channels where the thing is what the how the connection of the people through the electronic way, how it has been connected to the electronic way where branches, as at first it is the day with the branches, like currently like interacting with the people this becomes. Then afterwards you are having mobile banking where it has been there currently. Then the shops currently you are having Next, telephone banks, which has been set it up currently so much. Then afterwards, you are having electronic banking, which has been well versed like currently with the different, where you now for all those the season where you can connect with the people personally and you can interact. So that the thing is what becomes, it becomes very easy for the people, it becomes very flexible for the people to communicate with each other. Next, now your the thing is common banking products available. Now currently these are the new current banking products, common banking products which has been set it up into the current markets. What are the different type of it? First, credit cards, debit cards. Now first, credit cards and debit cards. Credit and debit card. These are the two types of cards. Now first one, moving to the credit cards. What are the credit cards? Usually now into this credit cards means it is what a post-paid. Here it is get post-paid or the pay later cards that drawn from the credit line money made available by the card issuers, that is called a bank, and gives the one month of grace periods to pay. If the amount is not fully paid, end of it, so the one is charged the interest. Now credit card, it is one type of a post-paid cards or a later paid cards. Like what you do, usually there are so many issuers banks who are issuing the credit cards of their own, and you just whenever if you go for any kind of shops or any kind of it where you want to buy any kind of products, so what it happens, it becomes very easy way where because in on your behalf the amount pays from the bank pays the amounts to on the behalf of that credit card, and you are getting 1 month grace period, and 1 month means within a 1 month grace period you are getting a 30 days credit limit, and within the 30 days the thing is you need to pay the amount. Like once you paid the amount, so ultimately the thing is what it happens, your systems again it has been inbuilt, means again the process has been there. But once still if you don't pay it, so ultimately the thing is they charge the extra interest, means whatever the days it is being given to you, so that 30 after 30 days the thing is once if you did not pay that amount into 30 days, so what it happens, that amount charge you need to pay it is parallelly. Now next it is what a debit card. Debit card is this card, it is what where it's directly debited, it directly minus from the account. Now here whatever the bank it is, now currently debit card it is what a prepaid card which has been said. Here there is been given vastly difference between the post-paid and prepaid card, pay later, pay now. So these are the two different ways where the debit cards and credit card has been performed. Now, as of a debit card, it is what you need to pay currently. That is what whenever you buying any kind of a product, you just swipe the card. So ultimately, into your bank account, the amount which has been debited means the amount has been minus, and directly directly the thing is what the amount it has been debited from the account, and that person account it has been credited. So what it happens, these two types of a transaction it has been done, where you paid the amount into the currently you need to pay, that is a later, not it's first it is done later, currently it is what you need to pay now. So this is but it's a very quick way and good way of process, as if you want to do the shopping, because in each and every cards you are having certain limitations. So with the help of that card limitations, if you want to buy 70,000 products, if you want to buy 1 lakh rupees product, so it becomes very easy for you to do it. Because in the credit card ways, you are having the limits, but in the debit cards, it is depend upon it how many the things you swipe it and how many you get the amount on that time. And each of it debit cards you are having a PIN number, that is called a personal identification number, with along with the PIN card, and that's confidential for you because it has been already generated from the bank. So these are the new eras where currently the people currently does not take amount, they does not bring the cash more as compared to because it becomes very risky to do the transaction, because certain period of if the purse if your purse or any kind of it has been left on that time, the thing is becomes very difficult for you people to get the cash or to know about each and everything. So that is why these two cards becomes very easy for you to carry it out. Currently, like there are so many people love to perform this type of doing the transaction from the bank, because it becomes very flexible, and it looks different types of a different way of representing the bank to it. So it becomes very common way where you can perform with the help of a debit card and credit cards. Then afterwards, the automatic teller machines, that is called ATMs, which we are doing a common way. Now, like automatic teller machines, it has been said, like in each and every you are having ATMs machines currently you are having. So while using this ATMs and while using this type of debit cards, you can just swipe it out that type of it amount, and whatever the amount it has been say, already the PIN number which has been already located to you. So currently this cards which is usually ATM cards, your debit cards or credit cards will directly will be there into this ATM card. So already you can just swipe it out, you can take it the amount. So once you take it the amount, so it becomes very good way where they ask the identification number, like first do you just need to put the card, when you need to take it the card, whatever they are asking, either you want it into which languages. So you need to press it whatever the languages you want. Once you press it those languages, then afterwards the second step it is what you need to go. The thing is what you need to keep that type of a cell phone according to you, according with you, and then afterwards once the card it is being done. So whatever the amount, what is the PIN number? Because in each and every bank, each and every person is getting different type of a PIN number, and with the help of this PIN number, the thing is what the work has been completed for the longer. So it becomes very easy for you to communicate. So your the thing is you're getting a personal identification number. It's a confidential one, and that password will be a secret. Here is already mentioned a secret password. It has been allowed to the customers. Now, what are the things? First, to transfer. Now, ATMs, it becomes very good way where you can transfer the money to and from the account where you want to do the transfer. You can do anything. Then, to view the account information, that if, for example, if you don't go to the outside anywhere, but still you can sit over there. You get the good way of information, whatever you want, how much the amount it has been debited, credited, each and everything. Then to order the cash, to receive the cash, like you need to order the cash because each and everything, your PIN number, it has been mentioned. So like you mentioned, because once each and everything you put the password, they ask your account, then whatever saving account or a current account you need to mention. Once you're completing out with that thing, they ask to you the amount, whatever. So that is what ordered, how many order you want to place. For example, 1,000, 2,000, 3,000, whatever the amount you want, you can pay it on that time. You can means you can put it on that time, figuring you need to do it on the machine. Once it has been done, your cash has been received. So once your cash has been received, the process has been completed. Good. Then afterwards, you are having EFT, that is electronic fund transfer. Now currently this has moved very good way where you can transfer your amount from one country to some other country, or one state to some other state, or from one area to some other person, where if for example one person is staying here, now that other friend is staying the outside of, for example, that person is staying to the where Rajasthan side. So ultimately if you want to do fund transfer, so what, only just require the account number of that person, and with the help of that account number, the thing is what, you just only need to press that account number, and you just need to do the transfer of certain particular type of a fund from one account to some other account. So it becomes very good way of EFT, which is being said. So currently you are having, this schemes was introduced from February 7, 1996, like once the Depository Act, when it is being planned on before that, this has been started up. So currently EFT has been developed a good way. Next, tele-bankers, as if I said, tele-banker, it is the way where whatever the informations you want relating to any kind of a bank, you don't go to banks, but you are having the people who are sitting for the back office. You can inform them, you can ask them, because all the banks are having their own helplines. And with the help of that helplines, the thing is what, you can perform your any kind of a duties, and whatever the systems it has been continued. So on that time you can ask the informations to them. But the thing is what, whenever you give for the tele-banking the call, you need to give it the account number which is in perfection, and with this you get it the total informations of your bank, like what are the systems, what are the performance, what are the each and everything it has been performed into the corrective measures. Then you are having mobile banking. Currently you are having mobile banking where you can transfer any kind of it amount from any kind of bank, or else you are having real-time banking services which becomes very flexible for you. Now Currently this becomes the new era, because in the previous times credit cards, debit cards, EFTs, then afterwards different type of banking we was aware. But currently this type of mobile banking has been set it up the new way, where the thing is what online bankings you can do it, online banking you can do it into the current way. And even becomes very good way where if you move it to the, any kind of a city or any kind of a country, you are having a different way of passwords, different way of login IDs which is being given to you, and with the help of different type of login IDs and password, each and everything has been set it up with the help of good terms, with the help of good knowledge. So it becomes very easy, very convenient, very secret way, where nothing it is being shown, where nothing it is to be not it, each and everything it is being secrets, because what you are giving email, and whatever the transaction what you do it into the any parts, you can sit and you can transact, do the any kind of a transaction. You only need, and all the record which has been already mentioned into your record, into your systems which has been already recorded. So currently in mobile, and currently you are having the apps which has been downloaded. So like you are having different banks, they are having their own applications, and with the help of that apps, the thing is you open it out, you just only need to log in out that thing, and once you log in out, you are having your own passwords, own IDs, each and everything. So with this, you can develop that thing to the longer way. So it becomes very good way where you can perform your duties into the corrective one. Then internet banking, currently we would be aware that this is also one type of bankings where currently this this all e-bankings which is being said. Now even this also develops very good way where you can communicate with the people to the longer way, the longer systems, to connected with the people, and then afterwards to get a good way of services, because as if not going into the mind, sitting at home, and you can do with the help of it whatever the fund transfer you want to do, whatever transactions you want to do it out. So it becomes very good way of internet banking. You can sit at home if you want to do the transaction from one bank to some other banks, or from one account to some other account. Even as if you are into the some other country or some other states or some other area also, still this type of a good process you can maintain on that time. So it becomes anywhere banking you can do it doing at any time, because you're, and even if you want to deposit from one branch to some other branch the cash also, it becomes too, you can do the transaction, you can do the transfer also from one bank to some other bank. So this type of it internet banking which has been there for the current trend. Then afterwards what are good benefits you get it on the internet banking? Like as if you have learned so many points of credit cards, debit cards, like this are all electronic way of transaction. So what are the good benefits you get it? First, it reduces the transaction, the cost of offering the several banking services, and limits the need for the longer number of expensive bricks and mortar branches in the staff. Means as if should not go into the bank and standing into the queue. It becomes very good way where only sitting at home you can do the transaction. Now as if you go to the bank, it wastes like so many times, so many energy you wasted. You sit for 6 to 7, you stand for at least 2 hours, 3 hours for it, and finally once you're getting a time, they are having a lunch break. So it becomes very difficulty for you people to make it adjustment for it. So that is why it becomes this other good way where reducing the barriers which are the transaction cost, and whatever the transaction cost has been reduced. Next, increasing convenience for the customers, since they have been conducted many banking transactions 24 hours. This is the best part where because what it happens anytime, anyway, like anyone, like for the debit card, credit card, and ATMs machines, why they have been set it up? Because this becomes very good into the current era. It becomes very good way where if you don't have any kind of money, but as if we are having this type of a card, becomes very electronic way. So we are blessed with those electronic electronic technology, because it becomes very good way the new changes which what we have done, because as we have already seen into the pre-eras how it was, and currently which we are running with the help of an IT revolutions into the banking sectors, a changing of new roles into the banks. So it becomes very good way of making the people more attractive. Then improving the customer, increasing customer loyalty. Then improving the customer access, attracting the new customers, easy online applications for all the account, including the personal loans and mortgage. Now, if currently you are having the good way of transaction where you want the information of personal loans, if you want to take it any kind of personal loans or any kind of mortgage, if you want to keep it up. So, like, what are the details? What are the informations? What how it is being settled? So this all the things information becomes very easy for you to get it out the information. So it becomes good benefits for the people. You can improve because with this improvement the people got more interactive. But like currently, as a small person also, they are ready to perform into the they are more ready to perform into the banks because banks it is a good way of transactions where they can set it up each and everything. Now this way where the good benefits you get it for the current internet banking. Then now role of an information technology that is called IT into the banking sectors. Now, in information technology, now banking, usually into the banking environment, currently we are good with IT technology, that is information technology. That is because with this information, with this good type of it, IT technology, the banking sector has been developed more. Because currently there are the people who go into the bank, but still they like this type of it way of transaction because what they perform their good duties and what are the roles of an IT people who are the into the bank because developing the vast way of communicating with the people and the vast way of technology. The buyers where previously was creating out it becomes very less. The way of transacting with the people so with this the people get connected more and once the thing is they go into the net the person gets identifying like which card it is being performed like which way of it is being performed and how they are using how many MBs they are using. So this is what they people are more good with and as of the financial structures it has been intermitted more. So with this becomes very difficulty this becomes very good way where you can communicate with the people into the common terms. So like banking environment has become the highly competitive today as if it has been already said. It becomes highly because currently not into the previous ranks only some banks was performing but currently in each and every banks mostly it is there in the private and the public sector banks they have in governmental banks they each and every bank has been set up with the help of this type of a system of an IT because it becomes very easy for the people to interact and becomes very like communicating to the people becomes very easy for it because what simply giving the call to 10 times to the person so ultimately you go that and currently you are having the help of a very simple and a very easy way where it becomes very flexible and very dynamic where it means becomes very huge but it's very less and the thing is the work does not because as if you would be aware with the help of computers with the help of mobile apps you are having apps whether it is small the apps is small but the work what it do it does very huge work and with the help of the huge work the work it has been completed with the help of it the way of the great terms. So it becomes very good way with the dynamical process which is being set. Now, e-banking, like mainly many banks have modernized their services with the facility of computers and electronic equipments. Now, there are so many banks who have been set it up with the help of a good way of computers and electronic way of good way of equipment. They have been set it up to make it out modernization of e-banking. Then, electronic revolution has made it possible to provide easy, flexible and the banking operations benefit of the customers. Now, as if I open with the help of an easy apps, as if I said to you, e-banking means internet banking. As if I do, so whatever the apps are there, I perform that type of app, perform that type of an apps into the corrective way. So it becomes very good way to the customers also to connect it with the net and even it becomes very for the people who are the portals who's the owner of the portal it becomes very easy for to connect that person. So this creates a very good impact to that person. Then e-banking has made the customer say goodbye to huge account registered and large paperwork banks. That is the best part which is being said, because where previously if you want to, if you are into the banks, you need to keep it out those papers, those challans, each and everything you need to keep it out with this sets you need to keep it, and there is a huge paperwork previously. But currently the paperwork where you are having very less you are having out, because each and everything you have been mailed, it has been put it out, and each and everything it has been stored into your computers. So it becomes very easy for you to do the banking structures of e-bankings into the India. Then afterwards, in the next part, so this is what it has been said, e-banking becomes a very good way. Now, you're into its e-bankings, which may cause an easy banking, offer the following services to the customers. Now, your e-bankings, as we have already moved further, different types of it, what are the way, where, how they are moving into the different type of it zone. Now, first it is what they are moving with the help of ATMs, we have seen, automatic teller machines. E-checks, currently you are having e-checks where online checks you can give it to it, and then after EFT, electronic fund transfer, you can transfer that amount from one bank to some other banks also. Then demat account, as if currently we discussed about the stocks also, like previously where the previously it was there on the physical mode where the shares was transferred from one party to some other party, or from one company to some other company, or is you want to buy any kind of shares from so like on that time you directly need to give it the call to the intermediaries, what are the brokers on that time. But currently you can even check to online, you are having intermediaries, but still you can check the shares rates online, and after checking out the rate, and then only you can give it to your intermediaries or call, because till the time if you don't give the intermediaries a call, then ultimately how you do that. But as a this type of a good systems you got, where you are having two options, where you are having right to buy and right to sell of any kind of securities from the market, and directly this amount, this security is directly transferred into the demat account. That is called the dematerialization of shares, where it has been totally transacted into the account. So like whatever the debit, whatever the credit systems are being performed, so on that time each and everything it has been systemized into the corrective measures. So this is what it is being said on the demat account. Then afterwards you are having mobile banking. Mobile banking you do with the help of it. We currently have seen telephone banking, where you want a certain type of information, you can gather those type of information. Then internet banking, where you do the each and every transaction. These are the current eras which we are there, because currently we are into the IT revolution. So with the help of an IT revolution, we are into different type of systems. Last but not least, it is what the EDA, that is electronic data interchange. Means as if you want to change any kind of data, any kind of information, so that of the system it has been provided for you. So because this type of different type of services, which becomes very good way where you can communicate with the people, you can enact with the people into the good type of electronic form. Then here it has been given to you what are good benefits you get it to the customers. Now here anywhere banking, no matter wherever the customer is in the world, now balance inquiry, requesting for services, issuing instructions, etc. anywhere into the world is possible, because now if you want any kind of information, first previously you get it the terms and conditions, and it becomes very easy way to check those terms and conditions into the corrective way, because first you need to give the the detail was not there. If you want to have any information, again you give the call, again you go over there, so it becomes a time it has been wasting. Currently it becomes very smooth way, very good way, where the thing is what customers becomes for customers, just go to the app, you get it the total details, and once you get it the total details, each and everything you can check the balance. You can go, if you want any kind of services, you get any kind of facilities, each and everything you get it. The best part, you are getting all 7 days in the week, and 24 hours working, it has been moving on the transaction. You can manage the fund as if however you want. Then convenience acts as a tremendous psychological benefits to all the time. It is not like for the certain period of time it has been there. It is for the older period of time whenever it has been there. there. Then afterwards, cost of the bankings of the customers over the period of the period of the period a period of time. Like the cost, whatever it is, they charge. Like once if you visit to that app, the cost charge. If you don't visit to the app, the cost doesn't charge. So it becomes, and the cost is also very less, very it's not that much more, it's very less and very convenient for the people. Currently people are preferring this type of way of internet banking because it becomes very easy and very challenging for the people to communicate. And then afterwards the last is cash withdrawal from any branch. That's the best part which is being said for the ATM. For the customers, for example, if you want to get the as if you are having the account into the Bank of India, so you should just, it is not like that as if you are having nearby Canara Bank, so go to the, you should only search for the Bank of India, because as if you are having the card of the Bank of India only. You can even visit to the Canara Bank. This was not, this system was not there previously, as if there was only given the bank, means the credit card, the debit cards, the mobile bags, whatever it was there. Firstly, it was what from the bank, the issuer, the person, the banks, wherever it was there, there only you need to go and you can need to do those different type of systems. There only you can use that card from the bank wherever it is in there only you can use. But currently this type of good facilities which is given to it, your bank will be of different cards and your cards will be different and the bank will be different. There only still the ATM card. But the thing is they will charging more extra charge as compared to as if you go to the same bank, they will charge different charge. And last one, the online purchasing of goods and services, including online payments for the same. Even if you, for currently you are having so many shops you are having Shopclues, Jabongs and all, there are so many online shopping. So what it happens, sitting at home, this also becomes the e-way of transactions, e-banking for transactions. You buy any kind of clothes and directly if you want to do any kind of a payment, you just put it out what are the debit cards or the credit card numbers. Then afterwards you can just whatever the amount it has been there, users need to fulfill that amount and directly from the account it has been debited and that person account it has been credited. This type of transactions is already there. These are the way where current trends it has been performed. Then afterwards I am having different last slides that has been said with the help of banking with innovative ideas. Now this is what where the banking which is having the innovative ideas into the current way, into the current new changes which has been done into the current way. Like innovation schemes addressing competitions at present, the banks technology brings into the banking sectors market. Okay, now means into the banking sectors market, currently each and everything has been breathed more. It has been drastically, it has been changing, and currently to the physical form, the each and everything converted that thing into the electronic form. So it becomes very easy way, the paperwork less became, and becomes very easy way to connect it with the people. Then reducing the customer visit to the branches and thereafter interventions. Your like becomes very good way. Customer from house, that person doesn't comes to our place, but still at least they access with the help of an account. But with this, the thing is they do the interaction, and the thing is they doesn't intervene into it any part, because currently most of the people, like some around 50-60% are involved into that. Then interbanking reconciliations immediately thereafter reducing the chain of fraud and misappropriation, means as if any of the parties want to do reconcile of any kind of systems, they can perform that kind of reconcile systems also. With this, if any of the fraudly or misrepresenting of that person has been cheated to somewhere else, so that thing also it can be recognized. Then it becomes very effective mediums of promotions of various schemes of a bank and marketing tools of indenting. This becomes a very good way of marketing tool where you can even give it to the customer, because currently credit cards and debit cards with the help of zero balance also currently they are issued. So as if issues, but at a certain period of time, if you open an account and then of course you put that kind of amounts into it, so it becomes good way of challenging currently into the market. And last but not least, it is what integrated customers data, paths away from individualisms and customized services. Means as if we won't think about it like depends upon how we provide the service to the person. So it becomes very good way of interacting with the people into the different types of it zone. So like almost all the points into this chapter, it has been discussed in the last slide. Now almost all the chapters, all the points which has been discussed. So basically, first it was the chapters today we have discussed. I'll little bit conclude the part at the end. We have discussed with the help of new concepts. What are the new concepts into current market? How the market has been current market means how the new concept which has been developed into the banking sector's market. Because we learned with the help of history how on the primitive time on 330 before how the banking was developed, how the system was communicated on that time, and currently from how we move it into the we went to post, we went to the primitive way, we went with the help of nationalizations of the banking, we went with the help of an IT revolution into the banking, into the different. So into the first chapter we learned with that type of it, how the system was being performed, then afterwards how the independence, how it was performing into the independence part of it, then how the system has been upgraded. Then we learned with the help of two systems, that is a primary way of banking and secondary way of banking, where we learn with the help of where we learn with the help of a primary and secondary way of banking into a different type of a zone. So like we learn, just a minute, I'll just move it further. Like this is the we learn with the different types of it banks, primary banks and secondary banks, how it has been calculated. Primary, it is what because as if first if they're accepting the loans, if they're accepting the demands, if they're accepting the supplies, each and everything first time, then afterwards the thing is the second part they can move it into the secondary market. Because as if the primary banks, if it is being set up, then only the thing is the secondary banks will be set up. Then only the thing is my work will be moving very fluently, very good way of communicating with the people. So that is why accepting loans, we discuss about the accepting of deposits, then primary way of lending money, investing funds, then afterwards rendering of various services to the customers, creating creations, then afterwards way of remittance to the funds, dealing into the foreign exchange, securities, accepting of safe custodies. These are the different terms where each and every people of the primary market has been involved on that time. Now secondary we have learned with the help of now this is the most important, like new concept has been changed. So we are having three different ways where you are having fixed deposits, you are having primary market, secondary market. Now, we learned with the different types of banking, like saving account, then after recurring account, we learned with the current account transaction, different types of transaction, how it has been moved to them. So at least with the help of these two, the thing is what the things has been performed. Like first, this is for the saving, then afterwards saving for the car and house. I have written here for the securities, whatever it has been done, you're keeping certain kind of a fixed deposit, which has been done. That the current account here, it is what whenever you're doing a many kind of a business transaction. So with the help of a business transaction, each and every